please make sure coming through okay. And I'm looking for some slides right now. Trying to find the slides. Here we go. All right, there we go. All right. Well, that was nice. That was good. A very nice, enjoyable presentation that I very much enjoyed listening to. So I want to thank Morgan for having me this morning, inviting me to share with you guys what I've selected for this morning's topic would be I'd like to talk about trading around the open, that is the cash open, by the way. I'm not referring to the futures markets open. First, let me ask a question. How many of you guys in here today, how many of you trade futures products, S&Ps, NASDAQ, Dow, you know, DAX, Eurostox, those type of things? Got some yes and no's already. Some CLs, grains, okay. Some yes and no's. Okay, well for the no's, let me go ahead and share with you please that what you will be hopefully be able to get from this would be how to utilize this in being able to trade some of the other products. You know, for instance, I mean, you should be able to trade, you know, SPYs, diamonds, that kind of thing, based on the information that I'll be able to share with you in some of the various futures products that we'll be looking at. And if I do focus in on, sometimes I do, on the S&Ps, for instance, it's because I know how to read and trade the S&Ps pretty well. But actually, you can use the trading range correlations in the other markets and how they relate to the S&P in order that you could successfully utilize this strategy to trade other products. Now, here's what I mean. If the S&P has a trading range of 20 points in a day and the Dow has 200, well then, and that's not the case exactly right now, but I'm just doing simple math. Well, then you know that the Dow is prone to move 10 points for every 1 point price movement or fluctuation in the S&P. So currently, right now, actually, the actual conversion or for some of these other products would be about 8.5 to 1 for the Dow, 2 to 1 in the NASDAQ, at about 0.8, that is 0.8 to 1 for the Russell versus the S&P. All right. Yeah, you need real-time data. Definitely, absolutely, 100%. Yes, no question. You need real-time data to be able to do what I'm talking about, because you're gonna see some stuff that's going to be literally just trading right off of the opening bell. And again, what I mean by opening bell is the cash market, not the futures markets, which open actually now at 1700 hours or 5 o'clock in the afternoon Central Time, the day preceding. In other words, this market actually opened yesterday at 5 o'clock. First and foremost, risk. Please understand that absolutely anytime you're talking about trading, you're talking about having risk and there being risk associated with your trading. But most especially with some of these products I'm going to be talking about, because these are leveraged instruments. You can actually, in trading futures, you can manage to lose more money than you actually have in your trading account. I know it sounds, almost crazy especially to those who don't trade futures, but it's possible you can, because if you figure out what the true value, the notional value of an S&P contract is, you take where it's trading right now at about 1,400 and multiply it times its point value of $50, and you realize that you're trading about a $70,000 instrument or contract in exchange for what's required by most discount brokerages of approximately $500 to sometimes maybe $1,000 in margin requirement intraday. Now, the overnight exchange is actually set by, or the overnight margin is actually set by the exchange, but intraday, if you're trading with, say, 3T futures or something, a brokerage, discount brokerage operation like that, you may be afforded a $500 intraday margin, meaning that for every 10 grand in your account, you could trade, well, 10, 20 contracts. Not that you would or should, but you could actually do that. So risk, very important. Understand risk. Okay, so let's trade around the open, and how are we going to do it? First and foremost, first thing I like to do first, say grab a piece of paper and a pen, because you're going to need to take some notes, because I'm going to give you a lot of good information here, and I promise you're not going to be able to remember it all. So please grab pen and paper and take some notes. Early in the morning, when you're getting ready to start your trading day, I would first go to one of these two sites. There are many more. These two are pretty good and they're both free. And look to see, is there news that is to be released during the session in which it is I'm going to be trading. For instance, yesterday, you start trading at 8:30 in the morning. It would behoove you to know that ISM Manufacturing was to be released at 9 o'clock. You can go to one of these two sites and look for anything that's denoted by its having a red star, type of a red, anything red. On Forex Pros, it's like a series of reds, like up to 4 or 5 reds. Forex Factory, it's just a folder that's color-coded, either yellow, orange, or red. Red means high impact. And those are CPIs, PPIs, jobs, jobless claims, housing, ISMs, Philly Feds, thing like that. You want to know if there's going to be news, and I'll show you why you want to know if there's going to be news, because here was the last GDP. And this is a chart, a 3-minute chart, okay, 3-minute chart of a 30-year bond future that manages to trade from a 148 to a 147 handle in 3 minutes. Now, that's about a $1,000 move, and good for you if you were short. My point is not that. It is simply this. It obviously behooves you to know if there is news to be released during the session in which it is you are trading. And 2, know what products that news is likely to have an impact upon. I.e., obviously, anything that's like this GDP and CPIs and PPIs and jobs data and that kind of thing is obviously going to have a major impact on the S&Ps, NASDAQ, Dow, bonds, gold, crude, that kind of thing. So just be aware. This is just a chart of the. It's not to go cherry pick a chart. I've got a bunch of them. This is the most recent GDP. So some of the things that I'll share with you this morning are going to be kind of that of which that was kind of around that last GDP report too. So we'll get to some more looks at it here in just a minute. All right, so first thing I want to do is kind of, you're getting ready to trade. I mean, it's 8:15, 8:20 something, 8:15 in the morning Central, by the way. The bell at 8:30 Central, 9:30 Eastern. And you're going to start to just basically ask yourself a couple of questions. Where are we likely to open, here in a couple of minutes? Doesn't have to be to the tick. I'm not trying to get to the tick. All I'm saying is don't miss the forest for looking at the hard right edge and looking at that one little price bar on the hard right edge, and you can see that one tree, and that's all you see, and you don't see the forest. What I need to know is, are we opening this morning, inside or outside yesterday's range? Because it opens up different types of opening scenarios. If it's outside, then obviously you're talking about gaps and gap fills and gap studies and that kind of thing. You need to know what tendencies are for gaps to fill. If it's inside, then you want to know, okay, well, what are major pivots right here and about the area that I can look to trade off of and target, mainly target, because I'm going to show you how to actually look at an entry, but mainly target. And so basically it's just asking, listen, is this market gap open, 10 points, 100 Dow points, and it's saying, hey, look, well, obviously this market's very, very, very strong, or opening down 10, and you're saying, well, obviously very, very, very weak. I mean, you may be looking for continuation in that case, or if it's opening dead smack in the middle, like it did this morning, on almost exactly the opening print from yesterday morning, it's kind of saying to you, hey, we're not real excited about going either way, up or down. Maybe the market's sort of waiting to hear something out of Washington and or waiting for the big jobs numbers tomorrow morning, that kind of thing, which is what we had today. A market that's basically going nowhere, just kind of lying in wait. And we managed to make a little money this morning, but it's not anything to write home about. Market's not really moving much. And then you want to write down, here's some of the notes you want to take. You want to write down some of these key numbers. Here's how I start. I just build like a price ladder, a grid for, say, the S&Ps, and then, like I say, you can do the conversion for the other markets in order to figure out where they should be in relation to your S&Ps, for instance. But you want things like yesterday's open, high, low, and close, obviously. You want to know if there were extended highs or lows made last night. You want those, Globex high or low. Anything that just really jumps off the chart at you, like for instance 1412 area right now in the S&P really jumps off the chart. I mean, you need to be aware of a number like that if you're trading that that market, or an associated market too, by the way. when the S&P went into 1412s, you know, everything pulled back. NASDAQ, Dow, everything. So be aware of any big numbers that just literally jump off the chart at you. Really, that's enough said, I think, about that. Now here's where this is really something that I would challenge you to, you know, to even talk with a couple of your trading buddies or whatever and ask who in the world thinks of noting something like this. I really don't think it's very many, to be honest with you. I think you're in the, you know, you're in the 5 or 10 some odd 5 percentile or something that would actually think to note something like this. But if there is news earlier at 7:30, then big news like GDPs and CPIs, PPIs, stuff like that, note where the news pivot was. It's very important. Case in point. All right, I've got one here for you, this GDP, but here's another example that's really just right up to date, and that was yesterday. When the S&Ps opened yesterday at 1407, they went immediately to challenge the 7:30 a.m. news pivot of 9.5. They managed to succeed by one tick. Okay, so this works. What I'm telling you is very important, and you really need to write it down if you're going to trade these markets. They opened at 1407 and went to 975. 9.5 was the 7:30 a.m. news pivot, and from there traded all the way down to 1396. Now here's another example, and that is the one that we're looking at here. Let me grab a little dot here. So here's the example again about the GDP, like we were talking about earlier on the bond chart. That news pivot traded. It was 1402 on that day, okay, and it traded. I do have some charts. Yes, I sure do. That news pivot was 1402, and it traded to a swing high of 1410 that morning. That 1410, just like yesterday, on this day right here, this GDP, was also the swing high on the open for the regular trading hours session, the 8:30 a.m. cash open. All right, so it's not just a fluke that it happened on this particular GDP. The same GDP that I showed you a chart of a minute ago, it also happened again yesterday, literally almost to the tick. So this is something that I would encourage you to write down. Challenge you to even go ask a couple of your trading buddies and ask if if they think of doing stuff like this, because it really does work. We're going to get. I've got a ton of charts for you, probably more than I'll even be able to get through. I promise you. But I'm leading you to the chart right now with how you want to, the information that you want in front of you when the chart does start to populate at 8:30 in the morning. That's kind of where I'm going with this. I'm trying to get you the information that you want on a piece of paper in front of you, your card, your buy side, sell side, before we even see the open. So now on your key numbers sheet, you've got things like open, high, low, and close, Globex, high and low, any big numbers like right now, 1412 just jumps off the chart at you, stuff like that. You've got that written down, all right? You're coming in, now here's a couple other things that you need is daily pivot, you want that, and like support and resistance levels like S1 and R1, stuff like that. Okay, those are your key numbers, and we're going to use those in just a minute. Now the next thing, and almost the last thing that you're going to do is boom, you get the opening print, there it is. It's 8:30 in the morning. You get the open. You're going to write that down. That's a very important print. You're going to watch the market trade for a couple minutes. Why? Well, I do anyway. You can do whatever works for you, but I let it sort of settle out the open for a couple of minutes. Why? Well, I had a guy in my office until recently that used to work on an hour-on desk in Chicago, and when they sent their brokers down to the floor in the morning with all their big, fund orders for the open, you have a bunch of big money, big tickets coming into that pit on the open, market on opens, long and short and this and that, whatever. And I like to let that stuff sort of flush through and settle out, because for me, the way I look at it, and you can look at it however, but for me, it produces for me a range that tells me a pretty good bit of information right off the open. For the S&Ps, for instance, I want a range of about 2 points in the first 3 minutes. That's the opening swing. It's giving me support and resistance. Now, for convert for the Dow, well, that'd be about 8.5 to 1. So you're talking, call it 18, 19, whatever, 18 something, 19 points. And for the NASDAQ, it'd be 4, and for the Russell would be about 1.5 points because you get about 0.8 times the 1 point movement in the S&P. So you talk about 1.5 points or so range in the Russell. So whichever one of those markets you want to trade, you can do it just by what I just told you. Identify this opening range because, like I said, knowing what's going on behind the scenes, having worked with a guy that was on a desk, and what it's producing for me is that opening range and getting that opening swings, support and resistance. That's the last thing I need, and I'm ready to go. And so when and if I do get what is an average open, then I'm ready to go. If it's if the range is too wide, say out 3.5 points, then that's, I liken that to standing in the batter's box and boom, there goes strike one, 100-mile-an-hour fastball just whizzed by you. You're obviously going to be, pretty careful about the next couple of series of events, i.e. the next pitch, and whether or not you want to swing it at. As long as it's an average, regular little open, like, it is most days, I'd say really about 4 out of 5 days, then this is how I wish to approach it. When and if the market does breach that range, either high or low, it gets me thinking exactly that direction. If the first breach is to the upside by at least 2 ticks, then I think, okay, well, I'm going to be trying to position for a long here. One of 2 ways you can do it is go ahead and start to establish a position, or 2, let the market settle back down to about the midpoint of that range of that first couple of points that was produced there on the open. And trade, I would encourage you to trade in that direction, the stop being on the other side of that range. The reason that you've written down all these numbers is, and I'm going to show you this on the charts, is the fact that those are your targets. Those are your targets. Now, if the question is, well, is the target, last night's high or yesterday's high, or is it, today's pivot? I don't know. It depends on, what's trading right there in the vicinity at the time. It may be daily pivot, and certainly, there's a tendency for about 80% of the day, time the daily pivot is traded. So at some point during the day, you're looking for a trade. And if it's right there 3 points north of, where you're opening and you get the signal long, then yeah, the target's daily pivot, at that point. All right, so let's get to some charts. Show you some good ones and some bad ones, okay? Here's going to be good and bad. Equally as important, I don't know what ACD is, I truly don't. It's going to be equally as important to be able to identify what does look good and what does not look so good. So I'll show you good and bad. Here's the prior session close down here. There's a break for overnight, and boom, 8:30 in the morning, you get the open. Notice it's a gap situation. In this case, obviously, my targets then become prior session high and close should the market break lower. It's i.e. it's basically trading a gap, right? Well, so you get an open. We do get the breach of the low. The trade is short, and the targets are simply the key numbers that I've asked you to write down: prior session high and close. This is session low down here in this area, but anyway, that's high and close, and so those are your first 2 targets. Those are the first 2 meaningful targets. From there, you just end up basically just trailing stops and doing the best you can. This is not an all-day trade. I'm trying to get at basically trading around the open. Really is what I'm getting at. Same type of scenario here, wherein you don't know if this thing's going high or low. Is it going to break high or low? I don't know. It happens to break low. When it does, the target is the first support level, indicated to me as being such because I color code my various levels on my charts. The gold-ish, whatever, those are S1s and R1s and that type of thing. Red is pivot, and magenta is prior session high, low, and close. White is open. So white's open, magenta's high, low, and close, and red is pivot, and then you've got golds are going to be S1s and R1s. So clearly indicates to me that your first target's going to be S1 right there on this particular day. Here's one that doesn't work out so terribly well. You're basically fortunate just to have gotten to target, red meaning pivot, and breaks higher, goes right to target number 1, rolls over, and don't know what to tell you about this except that I'll tell you, once you breach the low, to me, once you breach the low of that opening swing, the trade really starts to break down, and I think you can see where that's the case. So this may be, half hour or an hour into the session. This range is still very important to me. The support and resistance of that opening swing, very, very important. We got a gap situation here. So targets become the gap, and then daily pivot. It's amazing to me. I go back and look at so many charts, and I'm not cherry picking charts either, by the way. I mean, these are successive days, as you can note the dates on the charts up here on the top. This is just like going through a week. This is a 3-minute chart. This is a 3-minute chart. Basically, the first target area objective is met within the first 30 minutes, because I'm going to get to how to trade after the first 30 minutes in just shortly. But these target objectives are generally met within like the first 30 minutes. I've got another trade that we like to do at 9 o'clock Central, 10 Eastern. Here's another. This is one that I pulled specially to show you about how to do the daily pivot. Mark, what you do is you take yesterday's session, high, low, and close, add them up, and divide by 3. That's a standard calculation for creating the session pivot. So if you're interested in the cash session, you take yesterday's cash market, high, low, and close, add them up and divide by 3, and you get a standard pivot. But most any charting package, you should just be able to go through the indicator. This is Ninja charting right here. So just drop down in the indicator section and go down and select pivots and apply it to the chart, and it'll give you exactly what I've got. It'll give you pivot, and it'll give you R1, R2, S1, S2. And so the reason I pulled this chart was the following. This one actually does trigger short, but you can see it gave you a little run, it gave you a little think maybe as to the upside here. It was one tick. Call it a one tick kind of fluke. I don't work with a little one tick breach. That's why I said early on it needs to be about 2 at a minimum to even trigger me as to thinking in that particular direction. There was a one tick breach here, rolled over, did trigger short, and went right to multiple targets, as you can see. Right to the that prior session close, and then to the low. Remember, magenta is prior session high, low, and close. Red is pivot, and golds are S1s and R1s. Here's another one that was a tad bit maybe nerve-wracking, and that is that we got the opening range, went right up to the very tick to the high and failed, and then did trigger to the short side and went immediately to target. All right, so I pulled these charts especially to show you how you can get some little kind of nerve-wracking sort of situations there, but fact is it just didn't trigger. I mean, it either does or it doesn't, and it didn't in this case, but it sure made you think it was going to, I guarantee you. Okay, so let's get to some bad ones. These are some losing trades that just happened, and I'll tell you on average, I think I've pretty well identified this as to the fact that this is going to happen to you about 20% of the time, one day a week. You're going to get chopped up like this, and the purple is either the high, low, or close of yesterday. It's all three actually. It's pulling all three for me. High, low, and close of the preceding day. For instance, let me take you over here. I'll show you. See the purple for, this is a session break. There's the end of the day, the beginning of the next day. See, it's got magenta there, there, and there. What that's saying is for this day going forward, it's saying, hey, yesterday, there was your high, and there it was. There was your low, and there it was. And there was your close. That was for the preceding day. So that way, when you open up here and you trigger short, well, the trigger short goes directly to what was supposed to be resistance 1, turns out to be support 1 because you open up way out of range. But that's what magenta does for me. You color code your charts however it works for you. This has just worked for me for years, and that's how I do it. The colors speak to me. In an instant, I see magenta and I go, oh, that's prior session high, low, or close. I mean, So here's a bad morning. Here's a bad morning. This one did trigger long, turned around, and stopped you out. The stops go immediately the other side. If this is supposed to be resistance and it's breached, i.e. we're going long, well then that's support, and that's where I hide, is right back there. And so clearly stopped out. And I'm telling you, this will happen to you. It'll happen about one day a week. But anyway, it's important to see where this can go wrong. And also important, I think that I stop right here and say something, that this that I'm sharing with you is not for everybody. Because look, here we are about, what, 6 minutes into the morning, and you're already stopped out for about 2.5 point loss. And if that's going to ruin the rest of your morning or the rest of your day, then what I'm sharing with you here is not for you. Because, you know, this can happen, and it will happen. Actually, I'm not going to say it can happen. It will happen. You're going to get stopped out. You're only 5-10 minutes into the morning, and you already stopped out for your first loss of, you know, 2.5 points, and you're thinking, oh man, how am I going to get this back? And this is going to ruin my morning. Well, this might not be the best way to start out your morning. You might want to wait for a more conservative approach, which is probably around 9 o'clock when you get the first 30 minutes of trade under your belt. Here's another pretty rough start to a morning. First triggers long, turns around, stops you out right there. Only took about 10 minutes to do it too, and you're stopped out for about 2 points loss right there. And it does happen. Once it does, though, trigger short, you can see that the short does, you know, continue on, obviously, and does quite nicely to the downside. But the problem is, if this just ruins your morning, then you're not much of the mindset of, yeah, let's get short and, you know, and get it, you know, and make another nice trade or make a good trade out of it. You know, if you're in the mindset of, hey, I got to get that back real quick, and let me get that, you know, let me get my money back from the market real quick, then this is probably not the best way to start your day. This is the end of this day, open of the next, and you can see coincidentally this one, you know, this day happened to work, you know, pretty nicely. But it was on the heels of a morning that obviously did not work out at all very well. White is opens. White is open. And so here, this white would have been the open of the preceding day that's off the chart to the left that we cannot see. The white here is the open of this preceding day right here. This open, you can see it clearly. And then the white here is the open of the current day. Whites are opens for me. I mean, it's just the way I do it. I mean, you know, you can make it anything. All right, so here's the next one. Here's a more conservative approach. 9 o'clock. You're going to get a range on average, and I've done a bunch of studies on this. I mean, 1,000+ trading days, and just really averaged it. On average, you're going to see the first 30 minutes of trade produce a range in the S&P of about 4 points. Remember, do the ATR conversion for the others. That's 4 times 8 for the Dow, 4 times 2 for the NASDAQ, 4 times 0.8 for the Russell, etc. But you'll find it to be about 4 points, maybe 4.5. I call it 4.5, whatever, in range in the first 30 minutes in the S&P. So one of the trades that we do in the trade room, and do it almost every single day, and it worked this morning beautifully well. It worked in 2 markets, and well, actually all 3. It worked short Dow, long S&P, and NASDAQ. And we talked about all 3 of them in the room this morning, as a matter of fact, today. But it's really pretty good. You let about 30 minutes trade go. You have a 30-minute chart. You know the range is going to be about 4 points. It's going to be about 4.5 points. And you're going to take a trade based on the breach of either the high or the low of that. 2 ways you can do it. 1, remember, pretty much everything has a tendency, you know, reversion to the mean kind of deal. So if it does trigger long, you know, you can come back and know the S&P is rotating around about 2.5 points anyway. Come back about 6-7 ticks and buy the thing on limits and save yourself that drawdown that's almost inevitable. Or 2, just take the, you know, you may be of a, you know, you may have more risk tolerance and may have 4 or 5 point risk tolerance, at which point you say, well, if it triggers long, take it long. I know I'm going to sit through a 1.5 worth of drawdown. That doesn't bother me. That's fine too. I'm just saying that you could actually save yourself a little bit of drawdown by let it trigger, show you which way it's trying to go, come back, and if it's going long, then come back and buy it 6 or 7 ticks back on a limit, save yourself that drawdown. Knowing that the tendency for the S&P to rotate 2.5 points anyway, what you do is you run the same 2.5 point stop. You're telling the market, I bought you 2 points on a normal pullback. I'm running a 2.5 point stop. Now you've got to work 2 times, right? Twice as hard to come stop me out. At which point you're on the other side of the bar anyway, right? And triggering short. So you're just dead wrong at that time. And in that place, you're just dead wrong. The stop, I think I just answered as to where would you put the stop on that, depends on the entry. If you take it on the simple breakout where it just triggers and goes and breaks out, then about 4 points. If it triggers and you come back and get it on a 6 or 7 tick pullback, 2.5 point stop will work for you. We got people in the room that do it both ways. One gentleman that takes it every single morning, just like a robot, click the trade, trades it on the break and uses a 4-point stop. Then we got a bunch of people that say, ooh, I don't want a 4-point stop. I'll let it pull back to me 6 ticks. I'll take and use a 2.5-point stop, something like that. So we got folks that do it both ways. Let's see what else we got here. 9:30. We don't have time to get into that. Here's one more last thing that I'll say, and then I'll just kind of say questions real quick because I know I'm out of time. The market really kind of slows down for me at about 11 a.m. I swear to you, if I was standing in front of a broadside of a barn, I couldn't hit it at 11 o'clock in the morning. The volume dries up. You know, people are hungry. They go to lunch. The volume comes out of the market. I mean, I tell everybody in the room, listen, let's take a break. Just take a break. We'll come back at 12:30 and look at it again. And so I went and I pulled a 100 tick. This is like a U.S. chef Forex pair, but it's a 100 tick chart. You can see that tiny little bit of trade right there took 12 hours to complete. And then for the next 12 hours, the green bar, you see all this trade that was done over this next 12 hours. And look at the time at the bottom of the chart where it all dried up right there. It was 11 o'clock. So it's just kind of a picture's worth 1,000 words kind of thing. What I'm saying and sharing with you this morning obviously is not for everyone, not going to work for everyone. I can just tell you that it, you know, I've enjoyed it. It works well for me. And tick charts, I do look at tick charts. I look at tick charts for a couple of reasons. I don't know that we got time to look at or get into it right now, but basically in looking at multiple time frame type scenarios, I'm looking at, you know, if it, you know, 144 is like a real famous fib, you know, number. Times 4 is 576. Times 4 is 2304. I had a friend write an indicator for me that timed the formation of a 2304 tick chart and found that it took 3 and 4, sometimes 5 minutes to form on average. So basically, if I'm looking at that, then I know I'm looking at what is on average a 3 to 5 minute chart. And I like both 3 and 5 minute charts. And so yes, I do indeed run some tick charts. Indeed. Okay, doke. Guys, I really need to run there that Morgan's posted to join. No, trade. Oh, goodness gracious. I mean, crude, gold, silver, euro, bonds, notes, S&Ps, NASDAQ, Dow, DAX, Euro stocks, and the list goes on. Live cattle, lean hogs, you know, corn, soybeans, all kind of good stuff. So, all right, I need to push on, and I want to say thanks again for Morgan for inviting me, and hope this all this was is to simply to hope that this helps, and hope you know some of you guys got something out of this and it'll help. Click the link, register, come join. We're going to be trading early tomorrow because we're going to trade the jobs numbers at 7:30 in the morning, and there is no charge. It is just simply come one, come all, and hope you do come because we're going to have some fun. Thank you, Morgan. Take care, guys. See you.
All right, thank you, Neil. Morgan's actually out picking up lunch right now. What we're going to do at this point, though, is transition over to John Netto. And John, are you in the room? Can you turn on your mic and give me a quick sound check? Okay. Let's see. I'm actually looking for your slides. It looks like they might not have made it.